Hey traders, welcome back to the weekly Forex Forecast. Last week we had a number of key events taking place primarily out of the US, and these events were the quarterly refunding announcement, which pretty much passed uneventfully. However, what was important was FOMC last week, followed by the jobs data on Friday. And this sets up a bullish bias fundamentally for the US dollar heading into this week. Why? Because last week we saw Jerome Powell speaking during FOMC. He came out, he disappointed the doves, and he said that rates were not only taken off the table in the March meeting, essentially said there won't be any rate cut in March, but he also said that rates will remain high as long as or until something starts to deteriorate in the labor market, because what they want to see is inflation not just coming down and touching 2%, they want to see it coming down below 2% in fact and stabilizing there. Now, once this came out, we had a bit of a rally, but then we kind of held this. Why? Because Jerome Powell said that rates are going to stay high unless or until we start to see the labor market weakening. And we had the labor market data on Friday. Now, the headline data, the official government data came out, was a blockbuster number. And because of that, the market looked back at the speech by Jerome Powell and said, we are not getting rate cuts anytime soon if this is the official headline jobs data that's coming out of the US. As a result, we had a big rally to the upside on Friday. And coming into this week, I am going to be looking for further upside in the dollar as one of my key themes that we're going to look at in today's trading plan. So you have a look at the scores for the coming week. The first thing to note is that all of the sentiment has washed out of these markets. I did say to you in previous videos, when we get this, we usually see 70% chance this shows of a near-term pause or reversal, to the upside in Aussie dollar, for example. And then it washes out. And once it washes out, this essentially sets up the next leg to the downside if the market's going to continue. So the first thing to note is that there is no sentiment. None of these markets are really overcrowded to the upside or the downside. So they could actually go a number of these intra-week. We could see markets moving intra-week because none of these need to continue to pause or consolidate. The second thing to note is on the long side of the currencies, we have the pound, but you can see the score is actually weakening. It is actually starting to weaken. And we also have the Swiss franc on the long side, and the score is also weakening. And very similar to the short side with the Japanese yen, but the score is strengthening. So what this shows me is that there isn't really too many major outliers here in terms of really good edge. And the market that I'd like to focus on the most is the New Zealand dollar. This is going to be my primary theme heading into next week. I'm going to be looking for New Zealand dollar shorts, and primarily I'm going to be looking at those alongside. You could look at pound New Zealand to the upside, but I'm primarily going to be looking for New Zealand shorts against Canadian dollar because this is the only currency in the bullish side of the scorecards here with also corresponding green arrow to show that it's bullish, but it's also getting stronger in terms of its net performance. So New Zealand CAD to the downside, we're going to be looking at in today's video. I'm going to be looking at trading next week. I'm then going to look at New Zealand dollar to the downside. So we're going to skip New Zealand franc because both the franc and the pound are bullish, but they're moving this way. And yes, I know the US dollar is in the negative side, but you can see it's negative and getting stronger. And we just discussed the fundamental reasons why this could very well make its way into the positive side of the scorecards next week. So New Zealand CAD to the downside, New Zealand dollar to the downside are two of my favorite markets that I'm going to be looking at next week. And then the third thing we're going to look at is we will look at New Zealand franc as well, because alongside the US dollar, the Swiss franc does have some safe haven qualities. And going into next week with what we saw last week at the QRA out of FOMC and then the labor market, all of this is pointing towards higher for longer, higher interest rates. And that is primarily going to affect negatively the commodity currencies like New Zealand dollar and Aussie dollar. And then also any risk off that we see because of higher for longer, very much like the 2022 bear market, any risk off we see should benefit the Swiss franc more so than the pound. So going to be looking first and foremost at New Zealand shorts as my number one theme. I'm going to be looking at New Zealand CAD, New Zealand dollar to the short side, and then New Zealand franc. After that, we're going to be looking at Aussie CAD to the downside, Aussie dollar to the downside, and Aussie Swiss franc to the downside. And those 6 currency pairs are my top 6 markets going into next week. Those are the 6 that I prefer the most. Aside from New Zealand shorts and Aussie shorts, we can also look at Euro shorts. The Euro essentially, makes up 57% of the dollar index. So if we are looking for an outperformance of the US dollar next week, then de facto, this will put downward pressure on the Euro. So I like the Euro for shorts next week. I prefer Aussie and certainly New Zealand shorts. But also look at EurCad to the downside and Eurodollar to the downside in today's video. And then outside of that, I will also look at the yen pairs. They're probably my least favorite because it is weak, but it's getting stronger. And also, if we see risk off coming into the stock market because of the higher for longer, the increase in yields in the US based on last week's events, then this may actually benefit the Japanese yen somewhat in that kind of risk off safe haven status it has. But nonetheless, the final two markets that we're going to be looking at are CAD yen to the upside and also US dollar yen to the upside next week. Okay, so let's have a look at the market, starting with crude oil as we always do. Now these levels here, people ask me, where are these levels coming from? These are automatically generated from the HedgeDash app, and I don't draw these on here. And what they show is they reflect market pricing probabilities of a 70% chance of crude oil staying between these levels next week. So what I'm looking for going into next week is, if we can breach the upper bound here, for example, if I'm looking to be short overall, if I have a short bias, that is going to set up a high probability, 70% chance of a pause or a reversal to the downside within the week. So in terms of crude oil, something important to note is we did get the US retaliation strikes over the weekend, and we are apparently going to see more of this. I think the key here is in relation to how it's going to affect crude oil, there aren't going to be any direct strikes inside of Iran, and this is therefore unlikely going to cause any kind of escalation. The strikes were in Syria, in Iraq, and Iran may not necessarily respond or escalate because of that. Now, in terms of the price of crude oil, there may be a short bump up in the price of crude oil, but because there's no direct escalation with Iran, then I don't think we're going to see any major spike in crude oil next week. However, just bear in mind, if you are shorting crude oil, which is my overall bias going into next week for any short-term trades, you do have that geopolitical risk attached to crude oil short. So, you might want to sit them out if you don't want to take that risk. But going into next week, any pullback in crude oil, I'm going to be looking for the market to pull back, breach the 75.61. And if it does that, this is going to set up the opportunity for a potential short-term short in crude oil next week. Now, if we start to make our way towards the upper bound, and instead of testing it, we actually break out before we get there, you can look for a pullback and a follow-through trade down to the lower bound at the 68.92. But I can either be short crude oil next week or do nothing. I do not want to buy crude oil as it currently stands next week. So the first Forex pair we're going to look at is New Zealand CAD. Now I can either be short this market or do nothing. I can't buy this market next week. So what I want to see is, you can see this market's already chopping around, consolidating. I would like to see this pulling back, breaching the 0.8245 and preferably testing this high or even this high. I mean, the deeper it tests, the better. But breaching the 0.8245, and in this area, potentially at this high over here, I will be looking for a near-term short opportunity next week. Now for the intra-week traders, again, if it breaks out before it tests the upper bound, especially if it breaks with momentum like this, doesn't usually break all the way down to the lower bound. It usually breaks with momentum, and then you get a consolidation, and then you get a follow-through trade down to the lower bound here at 0.8088. But preferably, I'd like to see this pull back so I can fade any strength in New Zealand CAD next week. The second New Zealand pair I like then is New Zealand dollar. We did have the FOMC followed by the jobs data, and of course they're linked because in FOMC, Powell said that rates will be held high unless or until they see the labour market deteriorate, and then you get a blockbuster jobs number. So this caused the big sell-off, and we could see this breakout intra-week, but what I'd like to see is this pull back, retest the upper bound at the 0.6148, especially if we test these highs. And if we start to breach it and test these highs, I'm going to be looking for a near-term short opportunity in New Zealand dollar next week. If we start to pull back and correct and we fail to test the upper bound, but instead we just break out like this, that would set up a potential follow-through trade down into the 0.5988. So just as if we breach the upper bound, there is a 70% chance priced by the markets of this New Zealand pair pausing or reversing above 0.6148. The same is true to the downside, and that's why the 0.5988, that's why this is on here as a good profit taking target, because once you breach this, the odds are that New Zealand dollar next week will start to run out of steam or potentially even reverse. And the final New Zealand pair we're going to look at is New Zealand franc. You can see this is kind of lacking momentum. Every time we test the low, it kind of bounces. Test the low, kind of bounces. So what I would like to see is going into next week is I'd like to see this pull back and continue to consolidate and breach the 0.5316. So I can either be short or do nothing, and I'm looking to be reactive rather than predictive next week. If we can breach this level, especially if we come up and test this high, this would be a great place to start to look for a near-term short opportunity in New Zealand franc. And again, if we break out before we get there, and we break out like this, you can look intra-week for a sell-off down into the 0.5201. So I'd like to see some strength in this market first, so I can take advantage of that strength and fade it above the 0.53169. That's my primary setup that I'm going to be looking at heading into next week. Moving on to the Aussie pairs, because Aussie short is my second favorite theme after New Zealand shorts heading into next week. Now we do have on Tuesday the RBA and the interest rate decision. So these setups are going to come after that event. I want to wait for that to take place. And then I'm going to be looking at a few things in the Aussie pairs to trade after that interest rate decision. Now, the first thing to note is that I can either be short the Aussie next week or do nothing. I cannot buy the Australian dollar based on everything we're discussing in today's video. So I want to see one of a couple of things going into next week. I'd like to see if we can pull back first and foremost, and let's say we get a kind of non-event. So the RBA comes out, they don't really raise interest rates, they hold rates, and they're kind of, not necessarily too hawkish, not necessarily too dovish. And what we see is, we see a near-term bounce in the Aussie, because sometimes you just get that. You just get some volatility around the events. It could be some people who were short actually booking profits, and you see the Aussie bouncing higher. But for whatever reason, it's a bit of a non-event, and we get a bounce in the Aussie, and we trade above the 0.8853. That is going to, especially if we start to test these highs, that is going to be the place I'm going to be looking for a near-term short for 1 or 2 days in AussieCAD next week. The second play is if we get a bullish catalyst out of the interest rate decision. So maybe they hold interest rates, it's not super bullish, but let's say the RBA comes out and they talk about, maybe hiking rates again, which again seems maybe unlikely. I think on balance it's probably a non-event. But let's say they do that. If they do that and we get a bullish catalyst, so as opposed to a non-event, a bullish catalyst, and we see the Australian dollar versus the Canadian dollar trading above the 0.8936, this is the level, because if you get bullish or bearish catalysts from interest rate decisions, you can often push into the second upper and lower bounds. And bear in mind that these are priced with a 95% chance of the market pausing or reversing at these levels intra-week. So if we get a bullish catalyst, I wouldn't want to short it at the first upper bound. I would be looking at the second upper bound above the 0.89360. And I would be looking for a day or two sell-off in this market from here. And the third thing that you can look at is, of course, if you get a dovish RBA. So in other words, you just get the Australian dollar weakening straight off the bat. And in that case, you can look at the breakout. Very often you get the initial move, then you have a pullback, and then you get a short or a follow through into the lower bound of 0.8687. So there's 3 things you can look for there. A non-event, I'll be looking to potentially fade it from the first upper bound. A bullish response from the Australian dollar, I'll be looking to fade it from the second upper bound. And if we get a kind of bearish response from the Australian dollar straight out the bat, and you get that sell-off, you get that kind of capitulation with momentum, then you can look for a pullback and a short follow-through trade after the event itself. Next is Aussie US dollar. Now, very much the same as Aussie CAD in terms of the setups. What I'd like to see is after the interest rate decision, if we get a pop higher and we start to take out these highs above the 0.6599, I'll be using those key areas of near-term resistance here to look for a potential short for 1 or 2 days down in Aussie dollar. If we blast through here because we get a bullish response, so this is just on a kind of nothing event, but if we get a bullish catalyst and we see the Australian dollar rally above the 0.6683, this is the second place I'd be looking for a near-term short for a day or two in the Australian dollar. And if we get, instead of a non-event or a bullish catalyst, we get a bearish catalyst and we see a negative response from the Australian dollar, and we get that sell-off that you very often see on those interest rate decisions, you can look for a pullback intra-week and a follow-through down into the 0.6429. And the final Aussie pair is Aussie Franc. The interest rate decision setup I'll be looking at is if we get a pop higher and it's pretty much a non-event, but we see the Aussie dollar just drifting higher and we start to breach the 0.57065, especially if we come up and we test the key resistance over here in the 4 hours, this kind of inch-week resistance, then I'm going to be looking for a near-term short for 1 or 2 days in Aussie Franc. And this is the kind of setup that I do day in and day out, or week in and week out for GMT members, is this fading of these moves in line with what we're looking at in the hedge algorithm. If we break through here with momentum and we get a bullish reaction from the interest rate decision and we get 0.5767, this level breached, especially if we come and test this high, this is the second place on a bullish reaction for the Aussie dollar. I'll be looking for a near-term short next week. And if we get, instead of a non-event or a bullish reaction, we just get the Australian dollar with a bearish reaction and a sell-off, we get this kind of momentum to the downside, I'm going to be looking for potential consolidation and a sell-off into the 0.5585. And the final euro pair is euro dollar. Now, of course, we had that big sell-off on Friday because of FOMC and then the labor market coming out hot. So the market said, you know, yields are going to go up because interest rates are going to stay high. Therefore, we get the strengthening of the dollar. What I'd like to see is going into this week, I can either be short or do nothing. I can't buy this. But if we pull back, I would really like to see us pushing higher, breaking the 1.08847 and testing these highs, and the deeper the better. Because sometimes people say, well, you had a short bias on euro dollar, but it moved higher. Yeah, that's great. That's what I'm looking for. If it pushes higher, that is the opportunity to fade that and to say those buying this are most likely making a mistake, and therefore, if we start to break above the 1.08847, I'd like to take the other side of this for 1 or 2 days sell-off. If, however, on the other hand, we start to break out intra-week, so we pull back and we just get a weakening, you can also look for a bear flag setup. Usually you get maybe only one of those during the week, and look for that follow-through down to the 1.0697. And the final Forex theme we're going to look at before we look at gold and silver is the Japanese yen short theme. So we're going to look at CAD yen and US dollar yen. You can see CAD yen is consolidating sideways. We are kind of grinding higher from the low. And I do on balance favor further upside in this market. What I'd like to see is, I'd like to see it come back down, test the bottom of this range, again, breaching these lows over here, and breaking below the 108.87. And this is going to be the opportunity I'm going to be looking for next week, potentially. Again, I prefer Aussie and New Zealand short themes, but any pullback in this area, this is going to be the opportunity to look for a day or two's bounce to the upside in this market. And again, if we start to work our way, as does happen, towards the lower bound, and instead of testing it, we actually break out intra-week like this, I would be looking for further upside into the 111.480. And the final Forex pair we're going to look at is US dollar yen to the upside. You can see we've kind of got this bull flag. We've got the momentum, we've got the consolidation, and then we have the momentum breaking out again on FOMC. Now, what I would like to see is, I would prefer, as usual, because once we breach these levels, we have high probabilities of pausing and reversing as priced by the market probabilities. If we pull back and we test this low, that would be a great place next week to look for another bounce to the upside in this market for 1 or 2 days. However, because we've got this momentum, you know, you can draw your trend lines on here if that's what you like. We may come down, and instead of pulling back down to the level, you can also look for that intra-week reversal to the upside into the 150.09. What I would really like to see though next week is this. If we can break below the 146.55 and test this low, that's going to be a great place to look for a near-term buying opportunity in this market. Wrapping up the video with gold and silver, and because of that bullish bias with the fundamentals that we discussed last week in the dollar, I do prefer shorts in both gold and silver. Now, I prefer silver for shorts, and if we get some geopolitical instability from the US retaliation strikes, you know, if Iran does escalate in some way, we could see gold bid up. So I prefer silver shorts, but I am looking for shorts in both of them. I do have a bearish bias on both of them because of my bullish bias in the dollar. So any pullback next week is viewed as an opportunity. Preferably if we can start to breach the 2069, I'll be looking to short from the upper bound, especially if we can push through, maybe test this high. This is going to be the area I'm going to be looking for a sell-off for 1 or 2 days, given the opportunity. And if we start to break out intra-week before we test the upper bound, and how that usually looks is you get a momentum sell-off, and then you get a consolidation, and then you get a follow-through into the 2011.48. I can either short this or do nothing next week. Buying gold is not an option for me. And last but not least, we have silver. Now, this is my preferred short out of the two between gold and silver. Any pullback next week into the 23.45, and especially if we can breach and test these highs, and there's a nice low over here. So this area here will set up a nice opportunity next week to look for near-term shorts for a day or two in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.